Hey you guys, I'm back here with Shane, founder of Dwell Mortgage. I have a lot of people asking me about different loan programs. They get a little overwhelmed. So I wanted to reach out to Shane and just give kind of a rundown of how it works. What are things to think about when looking into purchasing a home and getting lending on that home? So Shane, what do you have for
Yeah,
me?
it's something that comes up all the time. I just spoke to a couple of new clients this morning, and they don't even know where to begin. And we like to kind of focus on the three main pillars that I think really affect about 95% of the process. And those are income, assets, and credit. And when I talk about income, there's a few key factors to keep in mind. We focus on something called a debt to income ratio. And at Dwell Mortgage, we have over 30 investors we work with. So we really give the power of choice to the consumer to find the best combination of the product that fits their needs at an interest rate that works for them in a time frame that works. And so as we're working with the different investors, and we underwrite everything in-house, we're really focusing on the debt to income ratio. That means, what do you make every month versus what do you owe every month? And it's always your gross income versus your total monthly debt obligation, including the new proposed mortgage. So one of the things that a lot of people don't think about is your student loans, your credit cards, your car payments, boat payments, RV payments, trailer payments. Everything is factored into that debt. And so as we're looking at the debt to income ratio, it's your gross monthly income if you're a W-2 employee. It's your net monthly income if you're self-employed. It can be very tricky. And so we're always going to be asking for pay stubs, W-2s, tax returns, 1099 forms, commission, bonus, overtime statements, verifications of employment to make sure that that number is exact. The income and that debt to income piece is one of the key factors when people have challenges with other lenders, get denied, or maybe can't get financing and come to us. It's typically affected by that income and the debt to income ratio. When we talk about assets, we're not only talking about the money you have in your bank accounts, we're also talking about investment accounts, retirement accounts, maybe even pension income, and how that affects your reserves. And that would mean the money you have after putting down for down payment and closing costs. One of the things that a lot of people don't think about when it comes to their assets is how they move their money. So I am a key offender. I have like 6 or 7 bank accounts, and I have them for my fund money, my budget account. You know, the Dave Ramsey school of thought is where you put all the money in different accounts to budget. The thing to keep in mind is we have to track all of those bank accounts and any deposits or money that's moved. And it's the last 2 months. So just keep in mind as you're gathering your paperwork, you're going to want to gather any bank account that is intermingling with other bank accounts. Last, but certainly not least, I think probably one of the most important factors that affects the type of loan you can get and the interest rate you qualify for is your credit. We're going to pull a mortgage-specific credit report. Now, one of the things that comes up often is people will say, hey, listen, I just ran my credit on a mobile app, Credit Karma, through my bank or through my credit card, and my credit is 740. Well, unbeknownst to them, there are over 20 different credit reporting algorithms used. So the reporting algorithm we use specific to the mortgage industry is different than what they use when you get a car loan. It's different than what they use when they send you your monthly credit update. Typically, those are higher credit scores than you'll show on your mortgage-specific credit report. So it's really important to understand your credit. Also, a very interesting point to keep in mind, and we have a credit attorney that we work with. They said that over 80% of credit reports have inaccuracies. And those inaccuracies can cause your credit to be lower than it should be. So it's really important to understand your credit. We talk to a lot of people that are scared to see that credit report. They're scared to see that number. Knowledge is power. We can do a lot to work at fixing or maintaining good credit, but we've got to have a starting point. And that's where it's really important to have that credit pulled at the time of your pre-approval. So Jennifer, I think those are the 3 key factors that people really need to understand when getting into the process of buying a home using finance.
Awesome. Yes, that I think will answer a lot of questions. When it comes to credit, what is a good credit score that you guys like to see? What's the minimum credit score that someone can have to still be able to get in a mortgage to purchase a home?
Yeah, that's a great question. So kind of the rule of thumb is typically 620, but there are programs that will actually go below 620. In fact, we have a program that allows for someone who doesn't even have credit scores. But what you always have to keep in mind, with complexity comes a higher interest rate. So when people are online and they see these amazing low rates, that's under the assumption that you have 740 to 760 credit or greater. So really kind of that low spot would typically be around 620. There are programs that go lower. And that kind of that high mark for expecting to get the lowest interest rates is that 740 to 760. Understand too that rates typically adjust every like 20 points. So if you go from a 740 to a 720, 720 to 700, 700 to 680, you'll see that interest rate start to creep up as the score goes down.
Awesome. Well, thank you so much for the info. And we have a couple more videos coming with a couple more things that people ask a lot of questions about. But if you guys have any specific questions that you'd like us to do this or I can connect you with Shane on a more personal level. If you want to talk to him about your stuff on a personal level, we can do that as well. Don't keep me a secret. Share this video if you'd like. Would love to talk with you, your family, or friends if you are interested in purchasing a home.
Thanks,
All right.
guys.
Bye.